So what it feels like this morning is that this is the great reversal day. What has been up is down and vice versa. Tesla has three upgrades or higher PT price targets this morning, and it's down. Well, it was down 16, and then it was down 10 when I actually wrote this, and now it's only down, I think, 7. So maybe it's going to be back in the green. But in the meantime, Nvidia is up. So you see, it's whatever's the Dow Jones is up and the Nasdaq is after, the Dow Jones has been down, 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 down. It's finally up and the Nasdaq is down. Anyway, the Fed will speak at 2 o'clock Eastern, and then Powell will try to kill any remaining rally at 2:30. If there's significant news, I'll put out a special report, but we'll talk later in the show about the Fed meeting. By the way, there is a ton of news today. I know this is maybe even going to go a little long. Bear with me, though, because there's good stuff all the way through, right to the very end. Valuable information that will help you make decisions about how you're playing the market right now. And again, many of you don't play the market, but I still think it's a good idea to be fully informed on the macro, on the economic front, to be fully informed on Tesla. Anyway, let's get into it. Investing.com says this morning, on Wednesday, Baird, a financial services company, increased its price target for Tesla shares, which they had just increased them last week. It doesn't say that in the article, but now they've increased them to 480 from the previous target of 280. The firm maintained an outperform rating on the electric vehicle manufacturer stock. Tesla's stock, currently trading at 480, has shown remarkable momentum with a 159% surge over the past 6 months and is trading at near the 52-week high, 483. So the revision reflects the firm's growing confidence in Tesla's prospects. Yeah, that would be obvious. The new price target is based on approximately 57 times Baird's 2028 EBITDA. Earnings before that, which is then discounted back to the end of 2025 using a 9% rate. Investing Pro data shows Tesla's current multiple at 114.7 times, 114.79 times, with the last 12 months EBITDA of 13.24 billion. This valuation represents a premium compared to the average of Tesla's large cap, high growth peers. Yeah, well, what peers? You got to decide what the peers are, which typically trade around 4 to 53 times. Baird's revised forecast also includes adjustments to Tesla's financial estimates. While the gross profit outlook for 2025 has been lowered, this is partially compensated by an expected increase in regulatory credit sales. The firm anticipates these sales to be more sustainable than previously thought as competitors. If they're lowering 2025 profits, that would be a mistake. MarketWatch cited these bull and bear catalysts from the Baird note. Here's the bull catalyst. Introduction of new vehicles will help grow volume. Factory utilization will increase. Expected removal of the EV tax credit in the United States by the Trump administration is a negative on an absolute basis, but a positive for Tesla relative to its competitors, who will be hurt more. Production costs are falling for the Model 3, Model X, and Model Y vehicles, and for Cybertruck. Automotive regulatory credits provide a boost. Expansion into new markets. Favorable legislation under a Trump administration, particularly on full self-driving and the rollout of Tesla Cybercab. Continued involvement in artificial intelligence through autonomy, Dojo Compute, and the Optimus robot. Growth in Tesla's energy business and the first Optimus robots deployed in Tesla factories. FSD approval in China and the European Union. They left out the UN. The bear arguments would be these: valuation. So valuations will be lumpy as new vehicles are introduced. Margins will face, in that list of bull stuff, they never mentioned energy storage. Margins will face headwinds with lower price vehicles. Not true. Robotaxi rollout delays or car accidents. Geopolitical risks, such as a trade war with China, as Shanghai represents a major profit center for Tesla. Emphasis on key man risk related to Elon Musk. Spreading his time too thin with Doge. They don't say it, but with the Department of Governmental Efficiency. Push out of timeline for long-dated initiatives such as scaled robotaxi service and or Optimus. these are maybes. These are possible negatives. And then finally, the EV tax credit removal could be a bigger negative for demand than expected. All right, then from Sawyer Merritt, he says William Blair analyst Jed Dorschmeyer on the Tesla positives. You've bottomed from a delivery perspective. This is a quote, you've bottomed from a delivery perspective. You've got a Model 2 that's going to be announced, Model 2.5, Model Q, Model whatever you want to call it, that's going to be announced on the auto side. You've got an energy piece on the business that has a higher return on invested capital than the other parts of the business, and you have an autonomy and probably a pro-regulatory environment for that given Elon's position around the government, and you've also have a play on XAI. I see more positives than negatives, so he's increasing in giving an outperform rating. And this then also from Sawyer Merritt, CFRA analyst Garrett Nelson has raised his Tesla price target to 560 from 450 and maintained a buy rating. We raise our 12-month target to 560 from 450, he's quoted, based on the 2026 PE of 140 times. We increase our EPS estimates from 3 to 310 from $3. I'm at 410 without Robotaxi and 430 with Robotaxi for 2025, and to $4 from 375 for 2026. I'm at $8 on 2026. Our estimate revisions reflect both higher revenue related to high margin regulatory credits from the expected cancellation of the federal EV tax credit and lower unit cost assumptions. We anticipate the federal EV tax credit will be discontinued, etc. They should benefit Tesla by increasing its automotive regulatory credit revenues due to programs such as the California Zero Tax. James Catt has this morning on China. China keeps over-delivering week after week. Europe is doing okay too this quarter versus last, and 500,000 now looks a bit low to him. He thinks Tesla now has a shot at getting to the guidance of 515,000, and James Catt has been very, very accurate. We now have Troy Teslike at 498. Those are the only two so far that I've seen that have been giving us a number yet. And then James Catt finishes by saying it really comes down to the December in the U.S. market, which has been soft in October and November. Will the December numbers finally get going? Okay, from Reigns 1220, haven't quoted him in a while. He says, I think this is about FSD. He says, I think obstacle avoidance is especially gone, whatever he means by gone here. Escape velocity achieved is what he means by it. In a version 13, after the better reward function for collision prediction continued with 5 times the level of compute. He says, solving all critical disengagements is imminent. We only have 2 bugs left, which are traffic control and emergency vehicle. That's according to him. I think red light, stoplight running is already improved significantly after using AI4 native input. Together with fleet memory, solving this issue only requires some data accumulation, just a matter of time. He says, I expect Tesla to fully solve emergency vehicle handling in Q1 because the audio input in the 13.4 seems like the last piece of that puzzle. That said, he says, I expect Tesla to almost solve all the time-sensitive critical disengagements in the first quarter, leaving only red wheel DE, which can be handled by a fallback to remote intervention. What is red wheel DE? I don't know. Put it in the comments below. In October 2025, I expect they mainly work on expanding usability in poor visibility scenarios, mostly direct sunlight handling, and significantly solve the red wheel problem, whatever that is. If they succeed, I expect robotaxi testing to start at the end of 2025. If not, we probably delay. But whether they succeed or not, they will overall surpass humans in Q2. Net surpass, we probably need a few more quarters. For a net surpass, again, doesn't explain himself. In a super long and generally this is a separate article here. So we have this article in Atlantic, and it was really well written by Patrick George, and he attempts to convince us, now listen carefully, he attempts to convince us that Hyundai Kia, their new plant in Georgia is just what American consumers need, and that these new vehicles coming out of Georgia will be competitive to Tesla. Believe it or not, I mean, listen, I'm a Honda Kia fan. I think that they will be one of the finishers. They'll be one of the companies that lasts through the debacle that's going to be coming to most of the old legacy companies. But listen to this. He says, quote, by comparison, Honda EVs are starting to outclass Teslas. Take the Kia EV3, he says, the high-range compact car, which is almost on sale in Europe. Already on sale in Europe and South Korea, will likely start at about $35,000 when it comes to the US in 2025. At the recent Los Angeles Auto Show, all three Hyundai brands showed off their new models, which will each be able to access Tesla's previously exclusive supercharger network straight from the factory. That means they're winning. They're ahead of Tesla because they're finally able to have the actual Tesla standard built into the car. So I tried like crazy. This article's so long. I tried like crazy to find the great new features or differentiators that would cause someone to lean the way he's leaning, that these are better cars and they're catching up. So I found three, besides the fact they can now charge at Tesla superchargers. One of these is that they have a 7-passenger vehicle. That's the best out of the things that were listed, but it's not that big a deal. Here you go. This is a big one. The vehicles can work as power supply for your home. Well, that's nice. Cybertruck's got that, and probably the rest of the vehicles will soon, but that's nice. But then here's the one. Here's the last one I could find, and believe me, this is all there were in the entire article. At least some of these cars will make an engine sound and simulated shifting noises. So hold on to your hats, folks, because these Honda Kias are coming for us. I mean, Tesla better watch out. Okay, that's it. Tesla Boomer Mama says this morning, yesterday, ARK Invest now for the second in a row did not sell any Tesla. So this was in response to fun with numbers, and that's with a Z on the end, not an S. If Cathie Wood did not sell any Tesla today, the estimated implied weight at the close, she would be at 17% in her ARK-K, 18.41% in the ARK-Q, and 12.69% in her ARK-W. So that would be, I think, an all-time high. So Cathie might have been selling overnight. Maybe she started to sell in the overnight markets, and maybe that's what we've been dealing with in terms of the downward trend on Tesla overnight. Bloomberg now has Elon Musk worth at $486 billion. That's where Elon Musk is now, just $14 billion under 500. And by the way, Bloomberg is almost always understating his actual worth. Well, this is at the same time that Tesla has passed 1.5 trillion in market cap. SpaceX is at 350 billion, which makes it the most valuable private company on Earth. So we've got Tesla, which is now in the top 8 of all public companies, and SpaceX in the top is number 1 by a long shot. And Elon Musk, of course, double any of the individuals in terms of net worth. So let me ask a question. What would happen to car sales in 2025 if FSD was not going to be unsupervised? In other words, would we still have a great year? And I think that you have the 20 to 30% number that Elon Musk guided for, that 20 to 30% increase. I think that's what he's talking about. I think he's not including any not including FSD unsupervised. He's not including cyber cabs or robotaxis being out on the streets. Because you see, you've got these things happening. In addition, you've got Juniper, which might happen any day. You've got the new Model Q or whatever it's called, and that's going to come out in the first half. You've got increases in the Cybertruck, and you actually will have increases in the semi-truck, which that won't add a ton, but it'll be something. So I'm pretty sure that the guidance doesn't include the huge increase that's going to come when we get to unsupervised, and then as robotaxis start rolling out. As I've said before, I believe that all the used cars will be gone in a week, and then they'll start buying the new cars, which will just push up the new car sales dramatically in 2025. Chris G asked me, what's going to happen with insurance? He says there's going to be, and my answer is there's going to be a split. Okay, because once you have robotaxi, you're going to have this, and unsupervised, you're going to have this split situation. Tesla is going to have to be fully liable for any errors the car makes while it's on FSD, including all robotaxi drives. But then there's going to be these times when maybe you decide to take over, or you decide you just want to, it's only a 2-mile drive, you're just going to drive it, and you need to have liability for that. So I think it is going to have be a situation where almost everybody that wants to use robotaxi, everybody that wants to start using full self-driving and in an unsupervised way is going to have Tesla insurance, because there'll be no other way for insurance companies to be able to get that done. That's my theory. We'll see what happens. And what's it going to do in states where Tesla is not yet an insurance company? That's going to be a real issue. So we'll find out what's going to happen with that. Maybe we should get Elon to answer that one. All right, this is, by the way, I know, big long opening. I told you it was going to be a lot of news, and believe me, we are not even close to done yet. But Chris G and Alex K have recognized the value of this channel, and they have put money into the Christmas present pile over at Patreon. You could do that too. You can join Patreon. Information in the description below as to where you push the button to go over to Patreon and make a contribution to making this channel great again. This is making Randy's channel great again. I don't know. We'll have hats, we'll have mugs, the whole 9 yards. Okay. I have really quick here. I put out these investing rules yesterday. I thought I should share them with you. These are Randy's investing rules. Number 1, never cry over a profit, because number 2, regrets are for dummies. Number 3, it's okay to take a loss. It happens. Number 4, become an expert on any company you invest in. The more expertise you have, the better you're going to do. Number 5, the economy matters. That's what we do on this channel. The economy matters. And number 6, the stock market macro matters. You need to pay attention to those things. Number 7, worrying is a waste of emotional energy. So once you're invested, don't worry about it. If you're not invested, don't worry about it. Don't worry. It's not going to change anything. Number 8, only play with what you can afford to lose. And when I mean play, I don't mean invest. Invest tons, but only play with what you can afford to lose. Number 9, margins and options require experience and expertise. Do not play in that pool unless you have expertise and experience and borrowing against the experience of others. And number 10, have fun. It's fun. It's got to be fun. Yeah. Okay. The Wall Street Journal says this morning, the Fed rolled out a jumbo 50 basis point rate reduction in September because officials were worried about a softening labor market. Some signs of that softness remain, not really, but most signals are that the imminent arrival of the second Trump administration is sparking a revival of economic animal spirits. Animal spirits has become a phrase now. If you don't use animal spirits at least once in every article, you are not hip. Okay, we don't buy the theory, they say, that pro-growth policies are inherently inflationary. No, they're not. But those policies do mean that the economy won't need a boost from another rate cut. Why isn't the Fed taking this opportunity to focus on continuing the inflation fight? Inflation fight. I changed that line. Anyway, a common explanation for the Fed's recent easing is technical. Officials are said to worry that the inflation rate falls back towards the 2% target, and they assume it will. Real interest rates will rise too high if the FOMC doesn't trim on the nominal rate, getting closer to the real rate. But nothing about financial markets suggests real rates are restrictive. Quite the opposite. Equities are soaring. Bitcoin is above 106,000, near a record high. Household net worth is rising sharply again to 778% of disposable income in the third quarter from a post-Fed tightening low of 733%. Long bonds Yields popped up after Powell's September rate cut, and they haven't come down. The 10-year Treasury remains at 4.4%. The Chicago Fed's indices of financial conditions have registered loose for some time now, and are getting looser. There's no shortage of money. What makes Mr. Powell think monetary policies are restrictive? Perhaps part of Mr. Powell's worry is simply that markets expect this rate cut this week and might react badly if he doesn't deliver. Investors have placed big bets on the prospects of a cut to judge from the Fed funds futures market. But so what? A far bigger blow to Fed credibility would come if it has to raise rates next year because inflation continues to be stubborn. And remember what I've been saying about this reinflation is it's going to come from wages increasing too rapidly. And, well, I'll get to that in a minute. The last thing Mr. Powell should want to have is to raise rate cuts next year if inflation rebounds. President-elect Trump and many Republicans already suspect that the Fed cut rates by so much before the election was to help Kamala Harris. They don't think so, the Wall Street Journal. Perhaps Mr. Powell will issue a so-called hawkish rate cut in which he cuts but then tells the Fed press that it's only for a while. In other words, a hawkish statement today. Mr. Powell's best defense against Mr. Trump's political assaults is the Fed's credibility is the Fed's credibility as an inflation fighter. Why endanger that now with another cut the economy doesn't appear to need before the Fed has whipped inflation for good? If Mr. Powell does cut rates again, one sign to watch is how many dissents there are on the FOMC. All right, now I'm just going to, I'm always put off by an article like this that was so well written and so, I mean, it almost is exactly the way I think, and I think they're 100% right. But he doesn't mention the deficit one time, which is the core root cause of inflation. And there's no chance that the deficit is going to be cut. It's just going up and up and up unless the Doge Commission actually starts to show some evidence that they can make an impact quickly. So I reiterate my position. The Fed should not be cutting. I agree with the Wall Street Journal. But if they will, I think that they will give a slightly hawkish comment. We'll see what happens later today. Okay, housing starts. Breaking news. I told you this last week, Sunday night on the Monday morning show, that the housing starts would be lower and not up as was predicted. Privately owned housing starts in November were at a seasonally adjusted rate of 1.3 million, 1.289 million. This is 1.8% below the revised October estimate and 14.6% below November 2023 rate. Single-family housing starts in November were at a rate of 1,011,000, which is a 6.4. So single-family housings were 6.4 above the revised October rate, but the November rate for units in buildings with 5 units or more was 264. Building permits. Privately owned housing units authorized by building permits in November, seasonally adjusted rate of 1.5 million. This is 6.1% above the revised October rate and 0.2% below the November rate. And single family, okay, I can't, they wrote that very poorly. Okay, mortgage demand also decreased this week. This is the off season. And last year's activity was was very high for the season, very high. So I'm not shocked that we would be down right now. Until treasuries come down, which determine mortgages, we will be flat in starts and permits. At some point, these mortgage rates will start to seem normal. Then we might see some pickups. And then finally, oil demand, not so much. The latest data out of China showed that oil demand fell 2.1% in November on a year-over-year basis. The International Energy Agency expects Chinese oil demand to grow by just 140,000 barrels a day in 2024 and 220,000 in 2025, which earlier they were predicting China alone would grow 1.4 million barrels a day. It says China has historically been the global demand engine, according to Robert 𝐤𝐽, Director of Energy Futures at Mizuho Securities. He says, however, the rate of demand growth has slowed dramatically in the past year as the economy has slowed and EV sales have increased. Electric vehicles and plug-in hybrids account for more than half of China's auto sales in recent months, and this is eating into gasoline sales, which of course impacts oil sales. Demand could still rise in China next year if the government decides to stimulate the economy to boost industrial growth. But compared to the US, China uses a higher proportion of its oil for industrial projects. The drop in gasoline use is a warning sign. Investors should be wary about oil going into next year. All right, so what's happening in the markets after that long-winded description of all the amazing news that's out this morning? Well, Tesla is now only down $5.33 after being down 16 at one point. So I missed my chance maybe to get my leaps back in. The Dow Jones is up 184. NASDAQ has now joined it after being down. The NASDAQ is up 25, and the S&P, which was also down, is up 13.42. The Magnificent Seven is completely mixed, half red and half green. NVIDIA is up $5.47 this morning, a big reversal for NVIDIA. And it had started up around $4, dropped way down, but now is, as I mentioned, up 548. You've got the Cathie Woods also completely mixed, as mixed as you could possibly ask for, but all by very small amounts. Okay, so waiting for the Fed. We'll see what happens with the Fed. Tesla has now flattened off at that 554 down. I don't know, could end up in the green today with 3 price target increases. I mean, holy mackerel, to end up down. But I mean, the run-up has been really, really substantial. Okay, percentages. You have got the Dow up 0.44, the NASDAQ up 0.14, and the S&P up 0.20, Tesla down 1.17. All right, let's go on to the bonds. You have got the 10-year is up 1.6 at over 4.4. It's been playing around right at 4.4. I don't know that the Fed decision today, if it's a little bit hawkish, you could see, I think that's what we're going to need to get these treasuries down a little bit. The 2-year is down a little bit, actually, at 1.5 down basis points, and the 1 month is down 2.6. Oil, let's see how it's responding to that news. It's actually up back over 70 at almost 71, $70.87. And you've got the Brent. Things are so calm overseas that Brent is now actually only less than $3 higher than Texas Intermediate at 73.77. Natural gas up 2.57 after a minute. It went down for a minute, but now it's back up to almost $3.40. You've got gold down again this morning a little bit, $9.90 to $2,652. Silver also down 0.75, almost down to $30. So you're starting to see a little bit of pulling away from gold and silver. Copper, though, up 0.31% at $4.16. The dollar mixed this morning, waiting again for the Fed. And you've got Bitcoin down 2,568 at 104,000. So it's down almost close to 4% from its all-time high. All right, so there you have it. So what do we got coming up today? We have fantastic stuff coming up today. We will have Phil back. We had him on a couple of weeks ago here. He'll be back at the late hour at 7:45. And you've got Jeff Lutz, of course, at 5, somewhere around 5 o'clock. So those are 2 to look forward to. As far as looking back, last night you had part 2 of the Brian White discussion that he and I had about what's going to happen with robotaxi this year. I think it all happens in the next 12 months. I've laid it out in 25 steps as to what will take place, and this was part 2. I'll put a card for part 1 and for part 2 in case you didn't watch either one of those or you only watched one or the other. I'll put those up right there. All right, so what else do I have to tell you? Oh, yes, Patreon. It's Christmas. It's time to send Randy a small present. It's hard to send me, any kind of gifts other than Patreon. So Patreon would be the gift of choice. It's on my list. Yes, it's on my list of have I been naughty or nice? I mean, what's going on here? All right, so let's go back real quick. Take one more last look at Tesla, still in the same area, $5.71 off at $474. Who knew? Nobody. This is even above Brian Wong, who was the most right, Brian Wong said 450 at the end of January. And here we're sitting at 474 at the end of December. Brian Wong gets the prize, beat me by 30, 40 bucks. Okay, I was at 410 for the end of January. All right. Have a fantastic day out there. We'll see if there's any opportunity for me to rebuy those leaps. Otherwise, it's been great talking to you.